Welcome to Getting Real with Real Estate with Danielle Kempf and Jim Kempf, St. Louis's favorite father-daughter real estate team. Your source of real estate information in the greater St. Louis area.
All right. Hey, welcome to part 2 of our awesome podcast with Joe Martin with the Caffeinated Accountant.
That's
Welcome,
right.
Joe, thanks for coming back.
Thanks for having me.
Thanks for coming back.
Always here.
Since it's part 2, since it's a new podcast, we have to have a new joke.
Hopefully better than the last
So,
one.
I'm kind of hoping it's a little step up from last, but I guess it was kind of funny. But go ahead.
It was funny.
Why don't skunks have to pay taxes?
Ooh.
Why?
Why?
They've only got 1 cent.
Nice.
You can steal that one.
I'm gonna steal that one
That
for
was
later.
good.
Yeah, you
That
might
was
see
a good
that
one.
be used.
That'd
Hey,
be
I'll
that
tell
group.
you. I think
Yeah.
here, I just remembered this one.
You got a joke?
Yeah, how did copper wire get invented?
I don't know.
2 accountants were fighting over a penny.
Oh, there we go.
They stretched it.
Yeah. That's good.
I could give that one to Brendan.
Yeah.
Anyway, we digress a little bit here, guys. So we're with Joe Martin with the Caffeinated Accountant. Joe is a fractional CFO.
Yeah.
And his business helps businesses, really, is kind of right, the nuts and bolts. Tell us a little bit about, because that's kind of a new concept for some folks.
Yeah.
Sure.
Tell us a little bit about that.
Sure. Helping business owners is the main part of this. A quick background again, just how we got here was I've worked for numerous small businesses who just needed accounting help, but
Yeah.
they couldn't afford what they could offer, right? You buy that entry-level accountant, you buy them, you pay for them,
Oh, sure.
and you kind of throw everything at them, right? You expect them to do more than really what they can.
Right.
Maybe you burn them out or they move on and then you kind of start over again. So it's an
Right.
expensive process.
That's I would imagine a big expense for a small business too, right? To hire that
Of
person,
course.
benefits, all that. So,
Right.
yeah, okay.
Yeah, so I mean, that's payroll, as we all
Yeah.
know, is one of the most expensive ones, most expensive thing you can do.
Yeah.
So to kind of curb that, I thought I can help these businesses do that from my own house
Yeah.
or from the beach, whatever that might be. You know? Who knows? I'm a
his
pool
thought-
person,
I like
but a
his
beach is
thoughts
fine.
there.
So that's the idea. So I look out for business owners. We come in and we call it a fractional CFO, but really it's just a total outsourced accounting function. So I mean
Okay.
we do everything from the CFO work to supplement that with the monthly, day-to-day bookkeeping and accounting, and then with
Okay.
tax planning and strategy.
Oh, that's awesome.
So we take the whole thing off your plate. The idea is to kind of let you run the business, let you grow
Right.
the business, give time back to you to do what you do best,
Yeah.
or spend time with your family, whatever you like to do.
Right.
Right? If you don't want to do that, then maybe you can golf. I don't know.
Right. Most people
Yeah.
don't start a business to do accounting, right?
No.
They're out selling something or making something, or right.
You have a certain skill, and usually that
Yeah,
skill
yeah.
isn't just running businesses.
Right.
So when you start a business from what you're good at, there's a million other things you find out that you have to
Yeah.
take care of.
So you handle all that stuff. That's awesome.
All the financial portion.
Yeah.
That's what we do. One, just to help you maintain, but the biggest thing is to give you the financials, tell you what the story is that they're telling, and kind of help you make decisions off of that, depending on where you want to go.
And so I would think part of that too would be like if as a company is growing and they're maybe looking at having to get loans and stuff like that, you can probably help them to plan that process, I guess, right? And work with their banks maybe a little bit and
Yeah.
kind of get stuff like that lined up for them a little.
Exactly. On the CFO side, we do a lot of things. One, debt consolidation, so we can kind of look at that. Whether it's high interest debt, kind of move it around on their balance sheet, try to figure out, try to siphon off a little bit so we can start paying stuff down.
Right.
We look into loans, right? So we have to kind of make it the P&L a way that how do we show some income here to make that happen. Also, depending on contractors are going to need some sort of loans or insurance to be able to do certain jobs.
Right.
Yeah.
Big things to do,
That's
just to try
awesome.
to show
Yeah,
what we need
yeah,
to
yeah.
what we need to happen. Yeah.
So your ideal clients are just self-employed, so real estate agents are self-employed, contractors, right? Landscapers, general contractors, any kind of business owner, I guess, right?
Any
From a
business owner, yeah.
restaurant to a small manufacturing company to anything, right?
Exactly.
Okay.
But my experience, or my most recent experience rather, would be for contractors and trades,
Okay.
manufacturing as well, just on that job costing portion, work in progress type accounting work,
Yeah.
which super important for them, especially tax wise, but also to know how they're performing job per job.
Okay.
Other than that, anybody needs it. I mean, I take care of anything from retail through brick and mortar or online. We do restaurants, cleaning companies, landscaping, all the above.
Okay.
So, talk to us a little bit about what those business owners, some of the common things that they're missing when they're running their business before meeting Joe.
I would say the biggest thing that I hear is their tax advice or business advice is coming from TikTok or Instagram, right? Like they think that they need to have a trust and a management company and this and that, and then to just try to avoid some sort of taxes when you're not making enough income to worry about that sort of thing, right? You just pay more money in legal fees than it's really worth to do all that.
They're going broke.
Yeah, right. To try to create some sort of maze that the IRS won't figure out. Like you're the only person to try that.
And they'll figure it out.
Yeah, and they'll
too.
figure it out. Yeah. And that's big. And then it starts to even how your entity's set up. There's different ways to do it, and there's certain times to look at that entity or what your goals are looking for.
Okay. What are the common structures that you see? I mean, first would just be Jim's Landscaping or whatever. Right?
Exactly,
Something.
right? So if you just start an LLC, anybody can do that. That's something that we can also help set up for you to kind of walk you through the process. But if it's just an LLC, essentially you're going to have just yourself as a sole proprietor, and that's going to go on your tax return.
Okay.
That's sufficient for most jobs or most businesses that are doing, net income of less than maybe $50,000.
Okay.
Anything below that makes sense because you're not going to hurt yourself too much tax-wise. Once you start getting above that, we need to start thinking about what that looks like. Or if you have partners, right? So if you have a two-member LLC, whether it's you and your wife, you and your partner, or a friend, you're automatically going to be considered a partnership under the IRS.
Oh, okay.
And that is a different ballgame there.
That's a whole separate
tax
thing. Return and the whole thing there too, right?
Exactly.
Yeah, that happened to me one time actually.
Yeah, you run into that. Yeah, and then because when you make decisions, and the other person has to be able to be there to make a decision with them. Right.
Oh, okay.
Everybody thinks they want an S corp, but it doesn't make sense. There's extra costs that come along with that, but there are some tax savings once you get over that $50,000 mark of net income.
Okay.
And then there's always a C corp, corporation, if you want to sell shares, if you want to keep money in the business.
Oh wow.
But there's
so that you got to, but that's couple $200,000-300,000, $500,000.
It depends. It really depends.
It
A lot of it comes with double taxing if you don't do it the right way.
Oh, I got you.
Because the corporation pays tax by itself, and then you pay tax on it.
Oh, that's right. On a distribution or whatever, it flows back. Wow. Okay.
So that's a short intro to that. But the entity makes sense. So before you choose what that is, talk with your tax professional to see what's best.
Yeah.
And I will say a lot of times, sometimes attorneys and accountants don't agree on what the best outlook for that is. So
Yeah, that makes sense.
I can imagine that. Well, because some of them are looking at risk, maybe, right?
Sure.
Eliminating risk, but you're looking at maybe more the money end of it. So those two could be.
Yeah, I wouldn't say they always disagree. I
but
mean, if you have both people are knowledgeable in what that looks like, I think it's a good partnership.
That's awesome.
Interesting.
Okay. All right. I'm going to hit this one because I think this is funny. We talked about this a little bit earlier off mic here, but some of the things that people kind of screw up on, I guess, is mixing personal and business expenses, right? And that's kind of a no-no, I guess, right?
It's not. It is frowned upon. I would say it's not ideal. The biggest thing is you don't know how you're doing. So you can. It's the easiest thing to start a new bank account, right? So just set the bank account separate, with your business EIN, and funnel your money through there, and then just pay yourself out of that.
Right.
I would say do it in the same bank so you can easily transfer yourself money, but try to make it as clean as possible. The more mess that you create, the more red flags you're going to put up.
Too many Starbucks trips and
now
all of a sudden the company's losing money, and what do you do?
Yeah,
right?
well then you don't know how your business is performing. The real expenses of a business. You don't know
Right.
how much it actually costs to run.
That's right.
That makes
a lot of sense. Yeah. Okay. Cool.
You mean coffee isn't an important piece in running a business?
My business it is. It's its own line item.
That's been going up a little bit too, I think.
Yeah, coffee is going up,
really
man. Jeez.
Yeah. All right. let's see, we talked a little bit about mileage and stuff like that. That's a big something to keep track of for any business owner, right? Because a mileage deduction can be pretty, I guess that's pretty substantial, I think, for a lot of companies. I know it is for agents because we drive all over the place.
Yeah.
So,
Right.
I mean, I know that helps us for sure. So that's definitely something we want to keep.
Yeah, on the tax side, for the mileage, it's always, full auto expense or mileage. And if you have a fairly new car, it's not going to be too much. It's not going to cost you much in gas, not much on maintenance.
Yeah.
Mileage is usually going to be the biggest return
bigger
on that.
expense.
Yeah.
Okay.
Now, track both.
You
And see.
should, right? Yeah. Oh, that's a good idea. I
Yeah.
didn't think about that. You made me think of something I might have messed up a while back.
I would say
but
track
that's
both. Because depending on what you have, and again, just like the home deduction, the car works the same way. So if you use your car as personal use as well, you track both the mileage, how much business, how much personal, your percentage use of the business usage. So whatever that is the amount of maintenance
Gotcha.
you can take.
Would you recommend, and this might be too in the weeds, but I mean, what about if the business buys a car? Is that, at some point, is that better or worse? Or I guess it really depends on where. That's probably an individual case-by-case decision.
Case by case, but it's certainly a tool or a strategy a lot of people use,
Yeah.
right? Everybody wants to buy the G-Wagon that's
or
over
lease it or
6,000
something.
pounds. Yeah. So also on the personal side, if you have a dual use, personal and business use vehicle, you get to share that the interest portion of your car payment as well. Now, a lease, if you buy it for the business, that can take the whole payment, which is nice.
Wow.
If you lease it for the business.
Okay.
So that's big.
That's interesting.
Should you buy a car? Sure. If you have the cash to do it, it's one of those things that you still have to take on,
At some point, you gotta have transportation.
Yeah.
So if it makes sense, I guess. But that's where, I mean, like working with somebody like you can really help you analyze that kind of stuff and kind of know where you sit. Because sometimes people just get so busy running a business that they're just like, oh yeah, I'm just going to do it, right? And they don't think about it, or they don't think twice, they don't think how it might impact them down the road, is I think what I would find.
Sure.
Or what just comes to my mind.
Well, if there was somebody you could ask, like an accountant who liked to drink coffee, that you could call or email and ask like, hey, look, before I make this big purchase, is this right for what I'm doing? How should I do this in a way that's going to benefit me the most in the business?
Yeah, that's awesome. That's a great service, man.
Yeah.
Cool. Awesome. All right.
One more question on the car. Do
Sure.
I get any tax benefits if I wrap it with like our branding? Like if we both brand both of our cars.
There is certainly some creative things that we could do there. Yeah, there is. I mean, at some point, it's got to be some marketing costs,
Yeah.
right?
I
No.
talked about that.
He's
You were
talking
like,
about it,
no
I'm like,
way.
no.
And I'm like, come
Yeah.
on.
Now, I will say, just think about it when you're driving down the road.
Yeah, don't be driving down 170 with your car wrapped.
And like cutting people off.
No,
That's the thing. Yeah, like let's be honest. We don't all drive the way that we should drive.
Yeah.
And you don't want your name and your face and your
Right.
number on the side of it.
Right.
A sticker on the back's like, how's my driving
Yeah.
today? With the 1-800 number. It's like, please don't call that number.
Yeah, don't call that
See me.
number. Yeah, put a fake number
I'll
on
have
there.
to call
Yeah.
my cell.
Yeah.
How are you driving? Call me. I want to know because
I've thought about
I think
that.
I know. It's kind of scary sometimes.
That's a good question. For the mileage, I did want to touch on that. I apologize.
Yeah,
There are plenty of apps out there that make that easier. I won't name any here, but there's a lot of them that do different things that might be easier for you. So just
Okay.
look into that so you don't have to keep a journal. But the IRS wants you to have a record of that.
Sure,
yes.
they do. Yeah. I've actually kept
We're
a-
old school.
I-
We have
I'm
journals.
I'm an old school guy. I got
I
it
do
written down in a little
too.
notebook, but that's just me. Just old school.
I believe it.
So, and this is just kind of a question. This is kind of out of the blue, but do you use like is QuickBooks? Is that something you use a little bit, or does that help businesses to kind of keep stuff? I mean, we've used it ourselves a little bit, but is that a pretty good system when it comes to tracking stuff like that? Is that something you use personally, or no, not really?
It is. I use
Okay.
QuickBooks for probably 99% of my
Oh
clients.
wow, really?
Yeah, so it's
Okay.
huge. I like the online version. If you use desktop now, you probably don't like the online version.
Yeah.
But that way that I can get into your books, I can see it, I can run reports,
Oh, yeah.
and it allows me to do all the bookkeeping from the back end, which is very nice. So it's cloud-based, it doesn't bog down your computer.
Right.
So it's very nice like that, and it's more reasonable, right? You can kind of pick your different subscription levels.
Right.
Okay.
That's cool. Right.
Yeah, that's big. And then it's also, you can take pictures of receipts, you can track mileage through its app, things like that.
Oh, nice. Okay, cool. That's awesome. All right, so we got some notes on some tips, some tax smart tips that would apply to really any business owner. It sounds like, right? You want to cover
Sure.
a few of those that you
Yeah.
mentioned? We may have talked to one or two of them, but
Tax smart tips. In general, we talked about tax on the last one, part 1, making estimated payments. When you're in a business, I would always say take between that 20 and 30% and set it to the side. You're going to have some kind of costs at some point, right? You're going to have to pay taxes, whether it's your estimates or your end of year.
Right.
Set that aside in another account and just park it.
yeah,
Something that's going to be liquid, if it's a money market account or if you want to do a high yield
Sure.
savings, whatever that might be.
Yeah.
But put it to the side so you don't spend it. Because
Yeah.
for my own self, if it's sitting there, it most likely will get spent somehow because you don't know how much you have to spend or not. So
Right,
separate it is the easiest way.
right.
Okay.
I would say that's a good way to start it off. And that also helps you in the accountable plan to reimburse yourself for those taxes too if you need to.
Yeah, okay.
Phones are usually the
Yeah.
first thing to go.
Yeah.
Right, to the business.
Yeah,
You use your
you gotta
phone
have
pretty
that.
much for everything, yeah.
100%, yeah.
I will say
Internet
on
service, phone.
internet phones, yeah. So that business portion of whatever your personal expenses are, that's huge. The biggest red flags when coming, I can just jump straight from tips to red flags.
Perfect. Yeah, perfect. That's good. Yeah.
What I see, the biggest thing you're going to fall into a red flag for is not reporting income.
Okay.
So whether you're a business owner who doesn't report cash,
Yeah.
or you're starting to leave stuff out, I think you quickly find out that the IRS knows a lot more of what you do
Than you think. Right. Big brother.
They still make you fill out a return and go through the whole process and pay for it,
Right.
but they know a lot of what you're making because all that money is except cash is usually reported to them anyway.
Gotcha.
So that's how you can ask for a transcript and they can tell you.
Okay.
Okay.
All right.
Yeah, which
What-
is interesting.
So let me ask you this one, because I'm sure you've run across this. I mean, where a business owner does not do these things and does not plan and doesn't set aside that tax money, and then they get that big, because I've heard some of my colleagues have the same problem. April 15th comes around, they're like going, I owe some ungodly amount of money, and they don't have it.
Sure.
Right? So can you help people with that battle when it comes time to have to deal with the IRS for back taxes and things of that nature? Is that stuff you do as well?
It is. Yeah, I'd like to say a wise guy in our BNI group. Can I say BNI?
Yeah, sure.
He says no job is too small, right?
Yeah.
And that's the same way I think about businesses. No business too small. So if
Yeah.
you don't need accounting monthly services, that's fine. But sometimes you just need quarterly.
Yeah.
And that's where that comes in. So some of my best clients start out as tax people or tax clients, right? So they come in and I do their taxes. They're 1099s of some sort, whatever business that may be.
Yep.
And they owe a whole bunch of money.
Yeah.
And they're somehow surprised that they've made all this cash all year and no tax was deducted and now they owe it.
Yeah.
You mean I
And
owe
yeah,
money?
like I don't have
You
that
must
money.
have did something
I didn't
wrong.
make that much money. And like, well, I don't. It looks like it.
Yeah.
There's only so much we can do, and
Right.
we do on both ends, right? So I mean,
Yeah.
I try to figure out all the deductions, legally possible
Sure.
to help you out.
Sure.
But you bring money in untaxed, and Uncle Sam's going to want
Gonna
his
find
cut.
it. He is,
Yeah.
right.
So that's where we start. It's usually the painfulness of that first year, possibly second year if you didn't want to listen to the first one.
Right.
Well,
It takes people time to
Now,
learn sometimes.
I
right?
get it. Sometimes it takes me once or twice to stub my toe before I move it, But that's the biggest thing is planning. So once that happens, let's try, hopefully your tax preparer helps you out. We kind of walk through the quarterly process of looking at revenues and try to plan for the new year, like saying, maybe we should set apart this side now.
Right.
But nothing is harder than a huge tax bill, and then
Oh,
also
yeah. And
to
then-
turn around and make that first quarter estimated payment as well.
Oh,
Oh, yeah,
that makes
right.
Yeah, so now you have to
sense.
double down.
Yeah.
Yeah.
Yeah, right.
Wow. And I know the IRS charges, it seems to me, like an exorbitant rate of interest when they're, right, for past due taxes or delinquent taxes, don't they?
Delinquent taxes, they will get
They
you.
get you pretty good if I remember correctly.
They
I don't
sure.
know.
Well, they hit you with a penalty and then
Yeah.
interest on top of that.
Right.
And then it compounds throughout.
Golly.
Wow.
Do they ever negotiate that in your experience?
That is a great question. So they do negotiate. They will work with you as long as you're a good customer.
Right.
Right. So as long as you don't do it every year. Yeah. If it's your first time,
Okay.
there's a form you can fill out just for an abatement.
Okay.
I just had to do this. If you've already paid the tax and you don't think it's owed, then you kind of fill out a form and you can offer to, hey, this is my first time. Maybe my accountant didn't tell me.
Okay. Sometimes.
Insert great, idea there. They'll give you guidelines on what is possible for you to ask for a refund for.
Wow, okay.
And then sometimes they process that payment for you. Most of the time they do if it's your first time, if you have a good track record.
Okay.
If you owe money and you don't think you do, then you can just send a letter. So if you haven't paid it yet.
Okay.
Also, they will charge you interest while
Right.
while they're debating the answer.
So you're probably better off just pay it and then fight that battle down the road. And
Right.
it'll save you money, it sounds like.
Yes, yeah, exactly. So a lot of times that happens when, through those past, ERTC, those employment tax credits going through
Yeah.
COVID.
Yeah.
So once you already go back and file, you already paid taxes on that money. The other way around, yeah. So you would ask.
Okay.
You've already used that deduction, so now when you
Right.
do it, then now you have to pay interest on the money you would have owed from 2 years ago.
Wow.
And so you can ask for an abatement on the interest you would have had.
Okay, I got you. Holy
Okay.
cow. There's a lot to that.
Yeah, I just confused I do it, and I just confused myself as I was saying it, though. So there we go.
That's awesome.
So then what if you don't have a good track record? Say you maybe haven't filed 2, 3, maybe more years. Can you still help?
I can still help.
Oh,
I can help you as much as possible. You still will probably owe money, but we can create a plan to do that. Now the IRS has payment plans as well that you can set up. They will still charge you interest. Sometimes they waive maybe a little bit of the percentage, but for the most part.
Wow.
Yeah, but now we plan. That's the biggest thing.
Yeah.
It's just put it behind us. At least take care of it. The biggest issue I see when people have large tax amounts is they just run from it.
Right.
Right? So they have one bad year, and then they don't pay it, and then all of a sudden the next tax year comes up,
Right.
and then they don't do those taxes.
Yeah.
And so it's just an ongoing thing, and then it causes you
just
stress,
piles
and then they
up.
can
Yeah.
they can file liens on things. Yeah,
Right,
so it's
right.
just
sooner
take
or
it.
later, Uncle Sam
Yeah.
will find you.
Right.
Yeah.
For sure. Yeah.
They will find you.
Right on. Awesome. Well, that was some good information for real, and some
Yeah.
scary information there a little bit.
It should be motivating, not scary.
Yeah,
But
motivating.
that should motivate you folks. If you're in any kind of position like that, get a hold of Joe at caffeinatedaccountant.com because he can help you get straight, stay straight, save money.
And not make it
And-
stressful for next year.
Right.
Yeah, and really it probably improve the operations of your business for sure. Right?
There you go. I think that's
That's
said better than
awesome.
I can.
Dude, thanks for joining us again, man. We appreciate it.
Appreciate
It's
it.
a lot of fun.
Yeah.
I guess we'll sign
Sign
off,
off.
folks. If you need Joe's help, if you need our help, just reach out to us. We're here all the time, working half day every day. We'll see you later.
See you later.
You've been listening to Getting Real with Real Estate with the Kemp team. Have questions about real estate or something you'd like to discuss? Contact the Kemp team at 314-336-1926 or visit our Facebook page at facebook.com/The Kemp Team. Don't want to miss any episodes? Follow us on your favorite podcast app or YouTube. The Kemp Team. Real, honest real estate.